as land investors, you need to find a few news sources where you're able to get information that is not quite as doom and gloom, and it's just reporting of facts. And so,
all right, welcome everybody. Today we are doing a bit of a land market update. It's definitely different than it was for several years there. It's no longer a blanket seller's market across the country. You actually have to work to sell deals. You have to know what you're doing and know what's in demand and what's not. So we're going to talk through that at a macro level and then also zoom in to what we're doing and what's working today. Before we get into it, Mason, how's it going?
things are interesting. I feel like general sentiment within the market is relatively low still, and it's felt that way for, I don't know, a year and a half now, give or take. But I mean, we're offloading a tremendous amount of inventory we've held for a while. And then on the broker side, we're still doing, deals every week. So I think it's obviously market specific and product specific, which I think we'll be able to kind of dive into. Part of the reason why certain land products, is what I kind of call them, or, different types of land or zoning or whatever you want to call it, are moving really quickly and really well. And others are not, but how there's still a tremendous amount of opportunity for us in this smaller space, and how some of the large companies are adapting to this market, because these institutions are not going anywhere. But yeah, I think it'll be a good conversation for us to have.
I agree. And what you said there about not just market specific, but also product specific, I think is key and will be a big theme of today's show. So I don't want to get ahead of myself, but there was one article you mentioned before we started recording about builder sentiment. Do you want to start there and we can kind of talk about that?
Yeah, absolutely. I think as land investors, you need to find a few news sources where you're able to get information that is not quite as doom and gloom, and it's just reporting of facts. And so the National Association of Home Builders always comes out with a lot of useful information and a lot of useful data. And one of the scores that they keep track of on a monthly basis is that of builder sentiment. There's a few factors that go into the builder sentiment score, like new construction starts, of the inventory they have moving, and it just amounts to a combination score of how they feel, how things are feeling. And right now in July, I think that for July of 2025, we're recording this episode on the 5th of August of 2025. Builder sentiment's at 33, which is a slight uptick. So it depends on how you read articles. It's a slight uptick from June, which it was at 32 in June, which is very, very low. During the pandemic boom and construction boom, it was in the 80s, to give you guys some perspective on what builder sentiment score is. And I think we've seen it ourselves beyond reading articles of, you hear home builder stock is down, you hear they're missing earning reports, you hear or earning targets, you hear builders are offering more concessions and different deals on their new construction homes to just move any inventory. And it makes it scary for a lot of the land flippers that are trying to flip these infill lots or wholesale them to builders, because builders aren't buying as much anymore, especially like at a single lot basis. But I think that while builder sentiment is low, you have to kind of juxtapose that to other data points out there, which is like housing inventory shortages. California is almost 1 million units short. Texas, 322,000. Florida, which it's crazy to think, because Florida has, it feels like it's dried out. We're still 289,000 units short. And Colorado, where we're at, 127,000 units short. So it's, even though builder sentiment is low, there's still the demand out there, which just kind of poses an interesting conversation that I'm excited to have with you about this. Of what do you feel like that means to you?
Yeah, there's a lot of different factors here. I think I wanted to highlight what you said of these big institutions aren't going away. People just think that the market's slow and so builders aren't going to keep building. Well, no, they're not just going to go out of business. That's how they make money. They just need to keep turning inventory and keeping the lights on, even if their margins are lower. And so they offer a lot of these incentives, and they will still be buying lots. It's just they'll negotiate a little bit harder. I've sold plenty of lots this year to builders. Now, it's not like it was 3 years ago. It's gotten harder, and they negotiate more, and I've had more pull out. So we'll get to, some of the pivots and you have made consequently. But before getting there, um, yeah, it's just a weird time where it's, I've heard economists say the pendulum always swings too far one way or another, right? So there's this massive housing shortage and people start building like crazy, and then things slow down because interest rate, a variety of factors, but interest rates, economic concern, etc. And then all that inventory comes to market and then doesn't get absorbed as quickly. And then so the pendulum swings all the way back. In a lot of places, Colorado, I know well, a lot of builders, permits have dried up substantially, new permits for multifamily and single family, and cities are stopping new construction. So I just think we never get a nice average or middle ground where there's a decent amount being produced, there's a decent amount of demand. It's always like massive demand, and then the supply construction lags, and then that demand calms. It's always an extreme, right? And so I think we're setting ourselves up for not necessarily what we saw in 2020 or 2021, but a lot of places that probably a seller's market again in a couple of years, at least, if not in Colorado Springs, increasing rents because there's just no new construction permitted really the next few years.
Oh yeah. Well, and the funny thing talking about Colorado Springs is we've talked about it for years of 26,000 multifamily units getting constructed. And now that inventory is coming online and people are like, it's scary. Multifamily construction is stopping. It's like, yeah, well, because all of the units that have been under construction for the last few years are finally coming online. And you're seeing the other components of the articles at the local market level of 500 jobs here, 1,000 jobs here keep flooding into the market. And where are these people going to live? And it's these multifamily, units, which is why, rent prices will go down because all these units come online. People are going to want to live in the new nice units rather than the other ones. But I think that, it's so interesting because with these builders that are planning for long-term growth and long-term success, it really comes down to inventory management, where there was this big boom and there's a lot of confusion that's happened because we're still in the fallout period from COVID of things were weird in COVID. Everyone was flush with cash. There was a lot of moving going around, a lot of digital nomadism, and markets that historically had never been as high of demand, like Boise, Idaho, became one of the hottest markets in the country, and lots of movement into Colorado and small mountain towns and stuff like that. But the builders they built a ton. Now they're having to offer a tremendous amount of incentives for anyone to be able to purchase it, and eventually they're going to move all this inventory, and they still have an obligation to the shareholders to make more money down the road. And so we'll talk about it in a little bit. Some of what Lennar is doing in terms of inventory management and land banking and option contracts and stuff like that they're doing. But
I just had a couple more points I wanted to make on this. All of what you just said is very valid. People forget, like, these builders have to keep building their massive institutions with huge amounts of capital behind them. Plus, they did very, very well for several years there and are not poor. So a lot of the small mom and pops might be getting cut out, but the big guys are still building. But there's two things that I think people get confused here, or one thing that I really wanted to highlight first, which is, to our business, people say, oh, builders are slowing down, land is going to get crushed. Well, land has more uses than just selling to D.R. Horton or one of the national builders to do a subdivision. There's recreational land, there's timber land use just for timber, hunting, I guess, would fall under recreation. There's the people that just want a place to park their mobile home 40 minutes outside of town. And so that's been a big part of what's kept us going and kept us profitable this year, is focusing and adding in other types of land that isn't going to be sold to a small, medium, or large scale builder. It's going to be sold to that person that just wants to park their RV there or get a mobile or a modular home installed there. And so land is much more broad than just land that's going to be entitled and used for a subdivision, by a big builder. And people forget that.
yeah, no, you're absolutely right. Everything's tied together, and we did see that big bust or big boom of recreational land that happened in 2020 and 2021 during COVID. But I feel like there's always, while there might not be as many buyers in the market for that product, maybe at this moment in time right now, there always will be. There's always going to be people that have money that are going to want to buy land. People have been investing in land since the beginning of time, and that's never going to go away. And whenever you think about your end buyer for these properties, you think about the lumber company that's buying timberland, and that's a great place to be right now. Timber futures are pretty much at a 3-year high as of the recording of this episode, and that's tied a lot to what President Trump is doing with his tariffs on lumber coming from Canada. I mean, we get a tremendous amount of lumber that comes in from Canada every single year, and so now domestic timber property is much more valuable. And then, on the hunting side of things, hunting in Colorado, I mean, it's a multi-billion-dollar market. It's one of the, and that's, every state has a tremendous amount of hunting that is going to occur no matter what forever. People enjoy it, and people are always going to recreate, even in bad times. So I think natural resources is a great place to be. You look at all of the different tariffs on all sorts of different minerals and natural resource products like timber or gold or whatever is going on. And it creates an opportunity on the domestic side of things to really elevate your business, and to just hammer Dan's point home of, it's not just infill lots for, medium and large size builders where the land business flourishes. It's all of these other different areas where you're able to not necessarily fully pivot your business to, but integrate within your current, pipeline that you're actually doing deals.
Yeah, well said. And there's another side of this whole coin. We're talking about builders and inventory. Well, we didn't talk about the resale side of the market. And as anyone knows, most of the country, especially the places that were hot, Mountain West, the Florida, Texas, a ton of new inventory has come online, not just new inventory, but resale, people finally listing their homes. Well, I saw an article from Newsweek that was really interesting. It was from a couple days ago. It's August the 5th. It was within August, and a record number of people are just taking their houses off the market. And this is getting to a really key point. So nationwide, delistings were up 48% in July compared to a year earlier. And so these are people where they're just not selling, and people are just keeping, just holding. There's a quote: "This points to sellers anchored to peak era price expectations and willing to wait rather than negotiate." I have a house in Colorado Springs that I bought in 2022. I doubt it would sell for more than I bought it. It might even sell for less, but it doesn't really matter. I'm just going to keep it. And there's lots of people like me. And what this is all tied to is delinquencies. And delinquencies are still very, very low, right? And so sellers, if they aren't going to get their price, and we're talking about just mom and pop resale, a lot of them are just going to hold.
Well, and additionally, beyond just wanting to hold it because you're probably going to sell it for less than you bought it for if you bought it in the last handful of years. Mortgage rates impact that. And I think something else is there's so many bad brokers out there that are also holding on to pricing expectations of whenever it was 2021, 2022, and everything was outrageous because there might be less data to indicate, especially in some of the nicer markets, that people are going to be able to sell their property for this much. So you have the owner's expectation of being able to get this much because their neighbor sold their property 3 years ago for this much. Realtors are also, I think, I'm sensing desperation from them. There's a lot of realtors that in 2024, did not do a deal, or did not really do a deal until, spring of 2025. And so they're not making any money. And they almost have this idea of, I'm going to go all out and try and get the highest price that I can. I'm also seeing more realtors flock to the buyer side of things rather than the listing side, because no one's looking at their listings. So there's, and this is all anecdotal of just stuff that I've seen in my own local market with other brokers that I've talked to. But, this misalignment of pricing expectation and brokers just not working hard to do it and convince sellers of hey, if you want or need to sell this property, we need to be priced right here. And there's certain gaps that are going to occur because end buyer financing is always going to be an issue, which kind of is the main point that we talk about a lot. And then we've talked about a lot recently with some of the larger rural tracts that we're doing, which we open up the buyer pool by being able to offer seller financing on all these deals. Because people aren't able to go get, a traditional loan from a bank for these land products that we're offering.
Several good points you made there. I want to bookmark the last point you make about rural land and seller financing and go back to the broker side of things. It's so true. Just using the little microcosm of Pueblo West as an example, I was looking for lots, duplex lots, and there are a bunch sitting on the market at like 35, 40. And they haven't sold at that price in 4 years, three or 4 or 5 years. And there's still people with incompetent realtors. And, there's one I talked to, it was an old lead. They called us. We had mailed them a long time ago. And they're like, no, we talked to a couple realtors. This should sell at least in the 30s. And I'm like, but there's on-market comps down the street at 18. And so I called a few people, and one of the brokers, speaking of desperate, goes, oh, yeah, my seller's really motivated. Just, make an offer. And so it was listed at 27.5. I offered it at 17, and we're getting it at 18. And that would have sold at 40K a few years ago. I'm not exaggerating at all. So several takeaways. Yeah, there are some desperate, not just sellers, but brokers out there that need to make some sort of commission. So you can get on market deals across, I think, a variety of assets. And then number two, I forgot my second point, but that first point, it remains true. If I didn't have so much cash stuck in Florida right now in Florida lots, I would be offering on duplexes and fourplexes all over Colorado. But I digress.
Yeah, I mean, that right there is it poses a unique buying opportunity that we haven't quite had in quite a while. And I think it's funny for all of you that are still sitting on the sidelines of now's the time.
Yeah.
What people sometimes forget is they'll see these properties, and Dan, you have a different mindset. I have a different mindset, that are sitting on market. And you're like, that's market price from 2 years ago.
Yeah.
And it's been on the market for 2 years. Make an offer. There's a good chance you're going to be surprisingly in the ballpark. And I think something else is like on the bad broker side of things, which is kind of screwing with the market a little bit. I think a lot of the flipping and wholesaling of land that's gone on in Florida has screwed with the market because land costs have just become overinflated. And I think that, we've dealt with people that are using these flat fee brokerages and in other states where we try calling them because we see, an on-market subdivide opportunity in, a different state or something, and we cannot get a hold of these brokers. Mm-hmm. So if you're looking to sell your property, don't necessarily waste your money. Like, and this isn't just an advertisement for me being a decent broker. The market's weird, and there's a lot of poor competition that's actually starting to change things in the market. But we don't have to talk about real estate brokers for too much, related to the land market, but it's just something to consider within the tactical advice that you can take and apply in your own business. Like, if you can't get in contact with the broker for a property you want to buy, whether it's a house or an investment opportunity or a piece of dirt, skip trace them, find the owner and call them directly, if you're able to legally, because people are wanting to sell and brokers might be getting in the way.
Yeah. As a quick aside, we actually got our first distressed seller in a long time. I mean, I don't know. I think I'm over 300 deals at this point, and this guy needs to sell. So thankfully in Colorado, we got a good title agent. She can get it done in like 4 days. So that's interesting. I haven't seen that in land. That's really rare.
What caused the distress with that? Is it taxes? Is it, or just life circumstances? He needs cash.
He doesn't or did not tell us what. I just know he said, I need the money. The whole contract. He's like, look, I would have listed this much higher, but I need the money. If you can get it done next week, I'll sign. So yeah.
Which, this is an aside from, national market updates. Always be careful with stuff like that, people. There are more scams and fraud going on in the land business than ever. I mean, this week, I got what I thought was an organic lead for a listing. They said they wanted to sell their property, asked all the right questions, had the right mailing address, everything like that, communicated via email. Finally gave me their phone number. I skip traced their phone number, didn't show up as anything. And then got in contact with the real owner, and they were like, no, we are not trying to sell our property right now. This is someone else, posing as us. So always do your due diligence, whether you're buying or selling, go through a title company and protect yourself with your own properties too, because I'm seeing more evidence of that.
Yeah,
go on.
that's such a good point. To our podcast, we did our YouTube video yesterday about always use a title company. We just made a whole YouTube video where we talked about this, but don't buy properties without using a title company and getting title insurance. So, yeah.
Yep, you can really, really screw yourself over.
Well,
So,
I did want to
go
hit
ahead.
on, I said, let's bookmark the rural acreage available on terms because I think in my mind, this is a massive opportunity. I hate generalizations generally about the market, but this is one that I have seen over and over again across the country. So, we had a deal submitted to us to fund in some part of Oklahoma. I've never done business. And I was talking to the realtor out there and he said the same thing that I have heard from realtor after realtor all over the country, which is, oh yeah, this is about 45 minutes outside of town. There's so many people looking for a big chunk of land. They can just have their homestead and commute in. Colorado, both Carolinas, Florida, just sold a 35-acre ranch in Florida just like this, Oklahoma, Arkansas. So I'm seeing this all over the place where that is a trend. And a lot of times these people need financing. So any thoughts there, Mason?
Yeah, a few thoughts. I got lunch today with probably one of the largest land seller of rural acreage like this in the entire country. Right, or I guess it was breakfast. And something that's tricky, because we're going to try and make this as tactical as we possibly can.
Mm-hmm.
So on the financing side, they mostly don't do owner financing. They work with Rural First and have them out at these events that they put on to pre-qualify their buyers while they're there. It almost functions in an auction capacity where they're going to sell off 30 to 100 of these 35-acre tracts in a day. So they're not selling on the MLS. They're not using brokers. They're using a ton of advertising via radio, Facebook, and Instagram. And if you're not looking at sales data directly through the county website, you might not be privy to the information that we're seeing with transactions that occur like this. Because if you're just using Zillow, which Zillow and Redfin, Realtor.com, and all the softwares out there, they're really good for kind of high level. But if you really want to understand what's transacting, you need to look at the neighborhood sales or go to the assessor's website or go to the assessor's office and just figure out what's actually selling. So I think that's one component that we haven't talked too much about, of going directly to the assessor's website to get the data, because it's different. It's very, very different of like, how many properties have you sold off market? That's not going to show up typically, especially whenever it's a new subdivision in some of these rural areas where you might not even have a parcel number up until the second closing after the subdivision. And so there's definitely no address that's going to pop up. I mean, it takes months or years sometimes for these developments to show up on these maps. So something to consider. Talk to your local community banks or talk to someone at Rural First. I've never used them. This is not an advertisement for them, but they do a tremendous amount of land loans. And so if you're trying to put a product on the market, being able to have a banker or a mortgage lender or a land loan lender that you can refer buyers to is going to help you out a lot in the long run.
That's a great idea. Yeah, having that in the back of your pocket and being able to refer them business, that's a great idea. I've never done that, but that's something that I probably should be doing. So yeah, regardless of the financing, I'm consistently seeing that these sorts of 5 to 20 acre tracts, 45 minutes outside of town that are unrestricted, that seems to be at the top of these people's lists, are highly, highly in demand, even amongst the slowdown in lots that builders might buy. So we were comping one yesterday in North Carolina, and there weren't a lot of comps on the market, and everyone that sold went pending just ridiculously quickly. And a lot of them said hunting land. And so it's just interesting how there's all these other niches outside of what would be used for building homes that are still in demand, and people often overlook that.
Yeah. So if you can find it, and this is where the power of anecdote actually really comes in, because we're so data driven in most of the decisions that we have. But if you're out there, like, you need to be networking with the right people. You don't need to be in an echo chamber with the exact same version of yourself. You need to be talking with the people that are doing it at the corporate level, that are doing it, at the mid-size level, and, talk to builders, talk to developers, talk to engineers, and see what's going on. Be aware of what's going on at your county and your city level, because those are the more important data points than these big national headlines that you're going to be seeing all the time of builder sentiment at, all-time low. And it's like, well, yeah, but then you look at interesting strategies, which I kind of want to talk a little bit about, like what Lennar's been doing for the past, I don't know, year or so, with how they've kind of moved into this interesting land banking space. That is like a really different way of doing business and inventory management that makes it so where they're not as, they don't deploy quite as much capital within it. But anything else you want to kind of add on the micro level before we kind of shift gears a little bit and talk about some of these other larger strategies that we might be able to apply into our own businesses?
Just that there's always something in demand, something. And we've talked about this in a couple of our YouTube videos, but even in markets that are really slow this year that I'm in, there is something in demand. And so an example of that is one of the counties in Florida I'm thinking of. There are huge amounts of quarter acre, half acre, 1 acre lots sitting, but the 5 acre parcels fly off the shelves still. Or there's a couple markets where duplex lots are still in demand amongst thousands of single family lots sitting. There's pretty much always something in demand, unless somewhere is just, getting blighted by massive job and population loss. So keep that in mind and figure out what that is in your given market. But yeah, go ahead, Mason.
Yeah. So I think it's always useful for us to look at what the largest people in the space are doing. Even if our business is 1 trillion, the size of it, Lennar, early 2025, kind of shifted their model. And you can kind of look into it. It's Millrose Properties is the publicly traded REIT that is holding a majority of Lennar's land assets. And what the model essentially is Millrose acquires these build-ready lots from developers that then they option. Lennar has a land option contract on these build-ready lots, where in the early 2010s, Lennar controlled about 18, 19, 20% of their land via option contracts. And now they're close to 100% controlled by land option contracts. That is being held by the REIT. Lennar pays the REIT, and then, the REIT, is acquiring these properties through the publicly traded, company. And how, I won't get into how all that works because I'm too dumb. But I think it's showing that these companies are still needing inventory, but they might not be looking to take them down themselves because so much of their capital is tied up into all of the current vertical inventory that they actually have, all the homes. And so if you're working to create more of a land investing business rather than a flipping business, which is where I really see my business evolving over the next 5 to 10 years, is land flipping for me turning more into an investment thesis rather than like my quick cash now income generating company. If you're able to buy land and actually go through the entitlement process and get it build ready and then sell it on option contracts where you're getting paid a little bit and eventually the builder's going to take it down, there's a huge opportunity in that place, because what the big people do, the smaller builders are going to do to follow. And if you're able to say, hey, I can, release 4 lots a quarter to you, over the next 10 years or something like that, there's a lot of people that are going to kind of sign on to that.
Yeah, this is an interesting strategy that's not often talked about in our world, and it's not new. The degree to which they're doing it at absolutely has ramped up, and it makes sense because they're more nervous about the market. But I remember talking to one of the land acquisition reps for Southwest Florida at D.R. Horton, because I sold them a couple lots in 23. And I'm pulling from memory here, so I don't remember all the details, but speaking tactically, there were opportunities where they would pay you a hefty interest rate to buy their land for them while they worked through the permitting process. I'd have to pull up my notes because this was a little over 2 years ago. But some of these opportunities, and I don't know if they're still there with DR specifically, were within, a couple $100,000. It didn't have to be a huge sum of capital. And so if I were in a different position where I didn't want to be as active, if I was just trying to grow or slightly grow and maintain wealth, that could be a great option where you go and you pick up these lots for the big guys, let them do their work, and assuming it's prime land, even if they do pull out, you get some sort of a fee in the process, and you can always resell it to someone else. So I do think that's another space that's ripe for getting, essentially amounts to hard money lending, at least the arrangement that I talked with the DR Horton guy about.
Yeah. No, and it's one of those things where it's sometimes hard to distill these concepts down into a way that's applicable to a majority of the people that are listening to this show. Ourselves included, that you see these acquisitions that occur in the hundreds of millions of dollars of they're acquiring a tremendous amount of land from developers that are shovel ready, and it's just part of their pipeline. But I think a consistent conversation that I've had with people in the home building spaces, they never quite have enough lots to keep their pipeline full.
Mhm.
And so while the general sentiment of builders is low, they still need to be building, but they really, more important than anything, is the price point of which they're able to actually acquire their land at. Just like within our business, we make our money when we buy, and that oftentimes is going to be the same thing for them. So if you're able to really get lots or, develop at a lower cost, per square foot or per acre or per finished lot than your competition, because you're able to acquire the land at a lower basis, it starts making it really, really attractive to these people, because the other stuff that we're talking about, it all impacts it. It's all connected, from the mortgage rates to the higher inventory and builders offering incentives to the cost of construction. All these tariffs they're increasing construction costs anywhere from, estimates of 7,000 to 15,000 for your kind of standard, single family home, of whether it's lumber or steel or any of the other stuff that the tariffs are impacting that you're seeing in the news. It all connects, and the main thing that we can control is what we're able to acquire land at. And so it's a hard time and a hard market to do it because of the other stuff we're saying of, well, my buddy sold his land in 2020 for 50,000 an acre. And it's like, well, the best we can do is 15,000 an acre, because that's, the best we can do. So I think that one of the main tactics is you're going to have to increase your marketing spend. You're going to have to talk to a lot more sellers, and you're going to have to nurture relationships over years, where we have deals that might take a couple years to close on the acquisition side. And that's normal in this space. I think that we've all been sold this idea that you're able to send out a mailer or have a phone call and get a lot under contract within a week or two and then sell it in 3 months. And, if you want to be in this business in 10 years, expect that your own pipeline is going to dry up and that you have leads sitting in your CRM that you need to nurture for the next decade. I don't know. We're really, I don't think it's a stretch, but I think it's the type of business that you're wanting to run and the investment thesis that you're creating, of whether or not you want to stay in business for a long time. You just have to have that pipeline totally full for the rest of your time, basically.
Yeah, it's a mix. You'll get quick deals occasionally, but you shouldn't expect that, because a lot of them do take longer. Or even if the seller's ready to go, you run into title issues or things that make the timeline far more protracted than you want it to be. And especially right now, because it's just harder to do assignments. At least in Florida, because of the fraud Mason was mentioning earlier, of course, assignments were one of the best ways to make money quickly. And we had a few months ago that we had under contract, and my realtor had a couple builders that wanted it. But as soon as he said assignment, they said nope. And he goes, no. I've done business with this guy being me, for a long time. We've got a great title company. They'll verify. No, there's been too much fraud, and there's a bunch of builders that wanted this lot that refused to do an assignment at this point. And that if your business is based on selling a contract, I would be concerned. I would not stick to that. I would find a way to do it differently, to close, to get capital somewhere, or at least have that option, because I think it's going to become harder and harder with the fraud, with the fact that you're just towing the line of legality. I don't think the cards are stacked in your favor if that's your whole business.
You're absolutely right. It's this weird thing that we've kind of seen in the land flipping space of, there's a lot of people that were, considered moderate size to big names in the industry that are not in the industry anymore, or they're really, really, really struggling. But whenever there's a misalignment of incentives of, I mean, you see it in the space of people fail at real estate, but they make money coaching. Um, and so that they really push it, they lower their prices, they try to sell as much as they possibly can. Um, and in order to make money, and then it inflates the market with a bunch of people that are really bad at it. I mean, people send me stuff all the time that sucks. Like, I don't even know how they did it. And I think it contributes to the fraud, because I think there's this idea of imperfect action that needs to be taken in your business. And just like get the deal done. And that works to a certain extent. But whenever you are part of the issue of inflating seller expectation by offering them $20,000 on their lot that's worth $6,000, and then you're trying to assign it for more. I think that's happening more and more and more. And I think it's just causing a lot of issues down the road for the people that are, attempting to create, an actual land flipping business. But I don't know. I don't want to just complain about the gurus or the newbies that are struggling in this space. It's just like, get proper education, create a real business.
Yeah. Well, I think that is a good way to kind of summarize the whole conversation. The conversation really, the market's not that unusual. It's more normal, where you have to have a good product. You have to know what's in demand in your space, in your area. It's not just a blanket seller's market. We can sell anything immediately. We're back to some level of normalcy. Yes, there are certain things that are abnormal, but the balance of supply and demand. I mean, it really reminds me of 2018, 2019. That's when I was first getting into the builds, and I was down in Pueblo West. I remember helping my older buddy with his builds. That's how I learned this. And it was a struggle to sell them. It was a struggle, and they were much cheaper, but they still took time to sell. And you really had to go out of your way to do everything you could to market and actually have a good product. And we're back to that, at least in most places, right? And so you can't just do this flippantly, send a few mailers and buy things at 30 cents on the dollar without trying and sell them the next day. It's not that anymore. You need to know your market, know what's hot in your market, be dialed in on both your acquisition and disposition, and build a real business. I just think a lot of the hobbyists are going to be gone, and already are gone in a lot of places. I mean, there's probably some parts of the countries that are still somewhat untapped, and it's probably easy, and there's people there having a good time. But most places, that's just not the case.
Yeah, and we're talking about some of the stuff at a very macro, large scale of hundreds of thousands or millions of units short across the country, and these companies taking on these billion-dollar acquisitions of finished lots. So stuff is still happening, and if you are getting into this business as a get-rich-quick scheme, you're not going to make it. And there are people that have really failed and really lost a lot doing this. So you need to be aware of what's going on. You need to understand land as an asset class in order to succeed in this business. Because just like Dan and I said, there's a lot of ways to make money in this business, and markets shift and swing all the time. And it's a great time to be in timber or natural resources. But if you don't know anything about it, then you don't know anything about it, and you're not going to be able to do it. And don't think that you can. If you're just trying to make money, go get a sales job, if you're even good at sales. So I think market sentiment is interesting. There's still a tremendous amount of opportunity out there if you're operating in, a good, ethical, and legitimate way. Be aware of your data. Don't forget to look at the county assessor's website and see what's actually transacting, to see what's in demand, because it might not show up on Zillow, even if that's like a good kind of initial market indicator to look at as you're analyzing a market. But yeah, I hope this was a useful overview of some of the major headlines that we're seeing, general sentiments, and hopefully some tactical information that you can take from this.
Last thing I'll say, when I actually sit here and think about it, I was thinking through it as you were talking. Almost all of the useful information I've gotten that's actually made me money was not from any sort of headline or news article. It was almost entirely because of someone I knew on the ground, or information we gleaned because we're doing business there, or one of my realtors pointed me in a direction, or a mentor pointed me in a direction. We sold, it was either 8 or 9 parcels in one subdivision last month. And the only reason we had the confidence to do those deals was because we had a local realtor who said, hey, this little subdivision is going up substantially. It had been dirt cheap, so we bought a whole bunch of them at the old prices. We sold them at the new, made a nice return. And that's just one example, but that's been the case for years. When I actually think about places I've made money, knowing where to target, what to target, it's been almost entirely from just stumbling along and learning from my own experience and or from local experts. So just a thought, when you're operating at what is essentially a micro level, and Mason and I's business are micro compared to what's being talked about in these headlines. Oftentimes, you need to be aware of the macro, but the micro, the local expert will help you more than anything, in my experience.
Yep. So go out there, network with the right people. Don't just network with the same version of yourself. Pay for stuff. Join local builder associations. Join local, be involved in the real estate community in the place that you're doing business. That might be some of the most beneficial because the system is easy. It's a direct-to-seller marketing business that you're able to get lots at a discount, or big pieces of land at a discount. But if you don't know what to do with it and you don't understand your market because you're not in it, get out there and get in it. So we hope you guys enjoyed this episode. Like, comment, subscribe. We want to get your feedback for these episodes where it's just Dan and myself talking about different things, from market updates to tactical information. Make sure, if you're listening on Spotify, go check us out on YouTube. We've got a lot of additional videos that we post on there beyond just the podcast. So without further ado, we will say goodbye. It's Mason McDonald and Dan Haberkost with the Big Picture Blueprint, signing off.